In today's video, we'll be analysing what has caused the massive 17% correction in the Bitcoin price over just the last 3 days. We'll be taking a step back and analysing the larger macro chart of Bitcoin. We'll be having a look at some very key support and resistance levels to try to get an idea of where this correction could end. But not only that, we'll also be analysing the correlation between Bitcoin and the traditional markets such as gold and the S&P 500 and try to figure out if this correlation continues, what we can expect in the other markets, and whether it could affect Bitcoin's price coming into the all-important elections in November of 2020.
How's that for a graphic? Bitcoin's boom time continues back above 10,000. Get this. If you're not paying attention, you probably should be. Bitcoin is now up 44% this year. So
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor, Brian.
Hello guys and welcome to the video. So here we're looking at Bitcoin here on a 4-hour chart, and as we can see we have had that massive 17% correction over the previous 3 days, where we've crashed from a price of $12,000 here all the way to a low just dipping below that $10,000 level. As we can see, we did break the trend line of that pretty messy consolidation channel that we've been consolidating within over the previous 3 weeks, as we let the RSI and many other indicators cool off, indicating that we could have been a little bit overbought. That was because we had that massive rally in the end of July where the Bitcoin price ran all the way from the low 9,000s all the way up here to well over the $12,000 range. That was an over 32% move in just a period of over a week or so. So we really did need that kind of consolidation time to let the RSI and many other indicators cool off. So as we can have a look here, guys, the RSI was getting a little bit overbought here. We were in overbought territory, well over the 80 mark on the RSI, and we did kind of let it cool off here while we've been in this consolidation channel. But something to really take into mind, that massive 17% correction, it doesn't look so large when we step back and have a look at Bitcoin on the weekly chart. Now, this is the weekly macro view of Bitcoin, guys. As we can see, we have initiated our next 3-year bull market by breaking that very key bull pennant that we've been consolidating within over the previous 3 years, ever since our 2017 bull market top at around the 20,000 US dollar range. So here's a better look at the 2016-27 bull market that we were just talking about. Now down the bottom here I have a chart of the RSI, and this red line correlates with every 20 to 30% price correction Bitcoin had. Every single time that the RSI got a little bit overbought, guys, we had one of these 20 or 30% corrections. So in that 3-year bull market, we had 1, 2, 3, 4, 5, 7 times that the RSI got over the overbought territory, which is signified here by this purple line. Every time the RSI got very overbought and over 70, it led to a 20 or 30% correction. Now, I've got a 2-part video series over on my YouTube channel where we analyze the 3-year bull market and where we expect the Bitcoin price to go in this current 3-year bull market that we have just entered in a lot more detail. And we also discuss Bitcoin's role in this global financial reset that we are currently undergoing, which is all part of a longer term 80-year debt cycle where the global reserve currency, the United States, has accumulated over $300 trillion of debt. And now that all that debt needs to be deleveraged, you're seeing the best performing assets around the world seem to all be alternatives to the current fiat currency form of money that is not backed by gold or anything. And that is why Bitcoin, gold, silver, they're the best performing assets of 2019 and 2020. So go and check out that channel over there, because as you can see, all the fiat currencies around the world, so this is the Argentinian peso, as they all hyperinflate, these charts are the charts of the Bitcoin volumes. And as you can see, Bitcoin volumes are going exponential as their local currencies are failing. And this is happening all around the world. The Chile peso, they've got too much US dollar denominated debt, and as that $300 trillion of debt needs to be deleveraged, it's hurting all the countries, the emerging markets around the world, such as Egypt as well. Their local currency is suffering from hyperinflation as they have to print their local currency in order to gain US dollars to service that US dollar denominated debt. But if any of that interests you, jump over my YouTube channel, check out those other two videos that we cover that in much more depth. But back onto that today's video, we're looking at these price corrections in a 3-year bull market and just how common they really are, guys. Because as you can see, every time the RSI gets overbought, we have one of these corrections. Now, in the 2016-2017 bull market, as you can see, that's 7 corrections on the screen there, where the Bitcoin price went through a 20 to even on some occasions a 42% correction in the Bitcoin price. Now, every time the RSI got overbought, we had a correction. Now, the best kind of corrections that you want to buy in a bull market are the ones just around the Bitcoin halving. So when we look back to the 2016 halving, you can see as we broke out of this bull pennant here, guys, you can see that we had a very sharp 28% correction, which shakes out a lot of your retail traders, and they get scared, they sell their position, and imagine only watching you watch Bitcoin price crash from $700 very sharply down to the $500 range. You sell your position only to watch the Bitcoin price rip from $500 all the way up to the $20,000 peak up here in December of 2017. In under a year, in around a year and a half or so, the Bitcoin price ripped from $200 to $300 down here in our cycle low, all the way to $20,000. Imagine selling your position in the first 20 to 30% pullback because you don't understand how the 3-year cycles work. Go and check out my videos, guys. We do a lot more detail on the 3-year cycle. So let's zoom into our current cycle and see whether our current 20% correction that we are currently undergoing is anything out of the ordinary. I don't think it is, guys. As you can see, it looks very similar to the 2016 halving. We've just had our halving, which is signified by this red line, and we've only just broken out of this large bull pennant structure where we went through the normal 2-year bear market, and we've just broken out, and I think we're about to enter our next 3-year bull market, which could mimic something similar of 2017. Now, I don't really place a whole lot of confidence in moving averages, okay? I don't like to look at a lot of technical analysis because really, the old saying, you can get paralysis by over-analysis. That is very true. But this 20-week moving average is one that a lot of people look at. And at the end of the day, it technical analysis comes down to the old self-fulfilling prophecies. If everyone's looking at the same thing, sometimes price can tend to do exactly what everyone's waiting for it to do. So as you can see, after we broke out of the Bitcoin halving here in 2016, guys, which is around here, you can see we broke out of our bull pennant just here, and we had that first 25% correction that we just showed on the other chart. This one here, that was our first 20% correction. And as you can see, we pulled back to that 20-week moving average. When we zoom in and get a bit of a closer look, the price corrected all the way back to that moving average. And every time we get a little bit extended from that 20-week moving average, price seems to pull back. We get these 20, 30, and even sometimes 42% pullbacks back to that 20-week moving average. As you can see, every time, guys, when we're in a bull market, this is the 2017 bull market, you constantly get these very sharp corrections, which takes you back to the 20-week moving average on 6 or 7 occasions, guys. It's like clockwork here with Bitcoin. And as you can see, our current pullback, absolutely nothing out of the ordinary. It looks as if the price has pulled back. We've kissed that 20-week moving average, and we've also held a very important support level here at the $10,500 range, which, as you can see, has acted as resistance and support on many occasions in the past. And when we just have a look, boom, once there, it held us down for a couple of times here just before we really confirmed the Bitcoin breakout. And as soon as we looked as if we were breaking out of this structure here, I posted on Facebook. So if you guys don't have me on Facebook, feel free to go and add me on Facebook or Twitter. I'm a lot more active on there than I am on YouTube, as it takes a lot of time to produce these videos. So I put a post out just as we were breaking out of this little consolidation structure here, and we had that massive 30% rally that you can see there on the chart, guys. So a lot of people are claiming this recent 17% correction in the Bitcoin price is due to one of the largest exchanges in South Korea being investigated by the police for supposedly being involved in promoting a scammy altcoin that was a pump and dump project that stole, I think it was $25 million from investors. But I don't think that's the case, guys. I think it has something to do with this chart right here. Now, you're looking at the chart. The candlesticks here is the S&P 500. In orange, we've got Bitcoin, and in black, we've got gold. Now, as we saw earlier this year in February, when all assets get sold off very rapidly, all asset classes correlate to one. So that was Bitcoin, gold, the S&P 500. The S&P 500 had its fastest stock market crash in recorded history. It crashed 35% in under a month, okay, guys? And that also brought gold down with it, 17% in the February crash, and Bitcoin got pulled down 50%. Now, you've got to remember the S&P 500 is a $25 trillion asset class. Gold is a $10 trillion asset class. So whatever they do, it's going to affect the Bitcoin price, because the investors in the stock market who get a margin call and they have liquidity requirements, they need to raise funds very fast to cover their over leveraged positions in the stock market. And as soon as you see a 10% crash in the stock market, they get a tap on their shoulder from the person that's providing them the liquidity, and they need to raise extra capital, okay, into their margin account. And that's where they sell anything they can get their hands on. That's Bitcoin, paper, gold contracts, because the liquidity is very deep and you can get your hands on the liquidity very quickly. But so as we can see in the stock markets, we saw a massive 4.5% correction starting September 1st, the same day that Bitcoin started dumping, guys. And as you can see, gold as well. All asset classes are having a bad few days. Now, that 5% of the stock market doesn't sound very much, but you've got to remember that's 5% of a total market cap of 25 trillion. So that's a lot of money getting wiped off the stock market. And that was because it's beginning to go exponential this week, guys. We can see that it's clearly had a very good run this week. The S&P 500. Let's try to analyze whether the S&P 500 is going to correct any further. Now, ever since the March lows here, guys, in the S&P 500, central banks played their hands.
Can you characterize everything that the Fed has done this past week as essentially flooding the system with money?
Yes, exactly.
And there's no end to your ability to do that.
There is no end to our ability to do that. And there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
They said they couldn't allow markets to crash, and globally, they've printed over $20 trillion, which, as you can see by the chart, has been funneled into financial assets to keep the bubble, the largest bubble of all time, afloat. And so when we analyze a little price correction that occurred in the S&P 500 back in June, as you can see, they had a very fast, very steep 8.5% correction over the course of only 3 days. And this prompted the Federal Reserve to step in just 2 days later and say it was going to start buying junk bond ETFs. So that means it was going to start buying debt of bankrupt companies. And obviously that spurred investors to jump back into the markets. And as you can see, after that announcement here in, I think it was around June the 15th, markets have rallied again. But very similar to what we saw last time, where it went exponential before it had that 7% crash. At the moment, markets are going exponential, and they are due for a little bit of a correction back into this kind of channel that we've been forming ever since much earlier this year. We've been kind of hugging this trend line here, guys. It's very natural to see a little bit of a correction, which is what we're seeing at the moment in the stock market. But so last time we had this very steep 7 or 8% correction in stocks. the Fed stepped in and said they would buy junk bonds. Well, what are they going to do this time? This time we have an election coming up. Don't forget that. We have an election in November. And Donald Trump and the US would like the stock markets to look really good as they go into try to get re-elected. So, why do they have more money than they've ever had in the Treasury General account of all time? As you can see here, guys, this is a chart of the amount of money that's being held by the Treasury in the United States. And the long-term average of this chart is around $200 to $300 billion. This is taking us back 10 years. We can have a look back even longer. And as you can see, the Treasury General account has never really gotten over $200 or $300 billion. But right now, it's more than quintupled that. Quintupled it. It's $1.8 trillion, guys. Excuse my terrible pronunciation there. But when we can analyze the last time they spent a large amount of money from the Treasury General account, let's have a look back here to April 2019. Stocks crashed 7 to 8% in a very short order. It was only about 2 weeks here. Stocks crashed 7 8%. And sure enough, let's have a look at what happened to the Treasury General account in April of 2019. That is here, guys. April, we had the Treasury General account was at 400 billion. As stocks crashed, all this money from the Treasury General account seemed to disappear. As the Treasury General account went down to 120 billion in only a couple of months. Okay, so 300 billion went missing from the Treasury General account. And, well, would you look at that? Stocks also rallied very, very harshly off that low there, guys. Coincidence? I'm not sure. But we've just had that large correction in the stock market, guys, coming back into resistance. And with the elections coming up in November, sorry. What do you think the Treasury General is going to do with all that money? That 1.8 trillion that they've built up, ready to maybe give out another form of stimulus checks or funnel it straight into the stock markets? Who knows what's going to happen in the financial markets in the short term? One thing's for sure, guys, volatility should be expected. With the elections coming up in November, and we have that $1.8 trillion bounty that Donald Trump has up his sleeve in order to save the stock markets in any short-term correction that they may have, one thing's for sure, we'll be covering all the news as soon as it pops up here on this channel. And as you can see, guys, to be notified as soon as any video I release comes out, scroll down below, hit the like, hit the subscribe, and make sure you turn on that bell, the bell notifications, so you get notified as soon as I release another video. We got part 3 of the Bitcoin super cycle analysis coming out on Monday, where I show you a $150,000 US price target for Bitcoin over the coming 2 years is nothing but conservative. Remember, we are in a long-term bull market. Any 20 to 30% correction should be bought. Okay, guys, stay safe out there. Buy the dip and keep stacking those sats.
In a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor, Brian.